Hello everyone, welcome to the part 2 of drafting a transfer pricing policy, where we will discuss important points to consider while drafting a transfer pricing policy. In today's world, where the wars are fought with words and the information is available on the click of your mouse, a smart document is where the true value lies. The principle remains consistent when you draft a taxation document, especially either a transfer pricing memo or a transfer pricing intercorporate agreement. A 50-pager agreement in an intercorporate scenario is a thing of past. The relevance of what is written and how is written has the maximum weightage. The difference between a sharp and a blunt intercorporate agreement is the transfer pricing adjustment, and further getting such adjustments and tax impact confirmed at high litigation levels. So, how should you keep the ICA relevant and sharp? Here are the top 6 points to be considered while drafting a transfer pricing intercorporate agreement. First, reality. Stay close to the actual business transaction. A draftsman often is so involved in perfecting the document from the drafting point of view that he forgets to keep the document as real as possible. In transfer pricing, the functional analysis is the first step and the ICA follows the far. Second, copy paste. Copy paste is a function in documentation applications aiming to make the life of draftsman easy, but it is not meant to make the life of the user of the document miserable. Copy paste blunders could pull you back in transfer pricing proceeding. A single typo could make a contract manufacturer a manufacturer, and that could have far reaching implications. Third, ICAs are expensive. Businesses often feel involving transfer pricing experts on drafting ICAs is expensive and hence resort to consulting the commercial colleagues. However, in the tax assessment or audit, the cost of such decision could be exponentially higher than the fees paid for professionals. Leaving the right jobs for experts could help your business grow exponentially and not the taxes on your business. Fourth, cost plus arrangements. As all the Indian food is not spicy and as all the Italian food is not pasta, it is important to note that the all cost plus arrangements are not the same. Every business offering in the value chain is unique and such uniqueness needs to be respected in the transfer pricing dealings and documentation. Fifth, transfer pricing documentation and ICA. Transfer pricing documentation is different from a transfer pricing agreement. The outcome of both the pieces of information should be consistent and in line with the business realities. Further, the transfer pricing policy is also different from an agreement. A policy is something that is followed by a group in certain nature of the international transaction, while an agreement is specific to the transaction between the parties. Sixth, simple versus complex. The users of the ICA are the tax authorities who may be used to reading general commercial contracts rather than the legal terminologies. It is advisable to keep the language free flowing rather than the use of technical jargons. Finally, as harmful as it is to self-medicate when you're sick, it could be equally harmful to your business health when you self-document without considering transfer pricing nuances. Transfer pricing specialist would be able to help you achieve your objectives around transfer pricing documentation and specifically the ICA. The business should focus on its core competency. For further information related to transfer pricing, you can reach out to us at our email info@transprice.in. Hope this video was value adding. See you in the next video. Until then, zooming out.